Okay, folks, welcome to Sunday Night Futures Live. And tonight we're going to be talking about the AI rally. We're going to be talking about Venezuela. What you're looking at here is an aerial map, satellite map, I guess, of the air traffic, not so much over Venezuela, but around Venezuela. The United States has supposedly put in a warning to aircraft that Venezuela could become a hot zone for military action very, very soon. Has been conversation, I believe it's been confirmed, that President Maduro has asked for an amnesty, if you will, if he were to step down. I believe that was declined by the president. I don't have that fact yet. And there's a possibility that Maduro may be stepping down and moving over to Iran. Again, this is all speculation, but what does it mean to us? What it means to us is that we need to look at energy. That's what we do as traders. We're going to be taking a look at energy because that's the shot. So let's begin. Let's take a look at the futures action. And this was up. This is the NQ. This was up not too long ago, a couple of seconds ago, but we have now reversed. We do have a new weekly higher high. So let's just do this. We're flat now on the session. I think we're up 0.10%. And let's just create another alert. We'll keep it loose. This is a 15-minute chart. Let's take a look at the S&P 500. S&P 500 down about the same here. Now flat for the most part. I got to check in with bond yields. Bond yields gapping down. NQ back positive. This is the one I really, really want to pay attention to. 4-hour chart of volatility hugging support. How do we get nugget up here? ES. Okay, back to ES. We're sitting around that unch level. Let's create an alert. We'll keep it loose. Okay. All right. I want to go to the Russell 2000 with bond yields moving lower. The Russell is the place you want to be if you're bullish on equities. And we are down 0.14%. They had a very good week last week. Let's take a quick peek at the weekly chart. A very good week last week. I have an alert here to fire off on a new weekly higher high. Let's go back. Let's wrap up the equity component. We have the mid caps. They're down fractionally. And let's just check back in really quick with the NQ. We do still have a short position here. It's not as big as it was. We booked profits on that sell-off. Now we're looking to reload, but I'm in no rush. We want to see topping action. We want to see validation by the market that we have a lower high and that we may be breaking down to new lower lows. Last week was an abbreviated week, but on the week ahead commentary with members, I pointed out, net, you saw Pretty good price action and volume action early on in the week. Then you had the pullback on volume, but one was an abbreviated day, and by and large, it was a bullish week. I'm not going to speak my book. It was a bullish week in terms of an abbreviated holiday week. End of statement. Let's take a look at oil. And this is really where I wanted to spend a moment. Yeah, oil spiking here. I spoke about oil. Nothing to do with Venezuela. When I did the analysis on the week ahead commentary, I said, this looks bullish. Oil looks like a buy, and wow, they are moving it up 1.67% at the open here. And I think it goes higher. I mean, even without Venezuela, the setup, weekly setup is very, very bullish. Let's check in with natural gas, which also looked bullish. That opened up. Here we go. That opened up, has reversed off of resistance. Let's set up an alert. Do we break out? Or do we put in lower lows? I honestly think that on this pullback here, you could probably buy natural gas on this pullback. I would wait for a 15-minute reversal bar before I did that, because natural gas is so volatile. You want to be very careful. They call it the widow maker for a reason. You know, it makes widows. You know, guys are jumping out of windows because they got too levered to one side or the other, long or short, of natural gas, and it'll rip your face off in a heartbeat. Let's say hello to folks. Mr. Sean, welcome. Miser, good evening to you. Mr. Pete, good evening. Yes, I hope everybody had a happy Thanksgiving as well. Thank you for reminding me. Tim, welcome. Yes, silver had an amazing week last week. The mining stocks had an amazing week. Enik, hello. Mr. Franklin, welcome. Pat, there he is. And George from up in Canada. Hello, George. Hello, everyone. Let's get started. Or let's continue, I should say. So, natty gas down, but I think this is an opportunity, because when you take a look at the weekly chart here, you know, nice consolidation. We broke out last week. So I think any pullback on natural gas will be rewarded if you put on a long position in the coming weeks. Now down 1.24%. So you can see how fast this commodity can move on you. So wait, 15-minute reversal bar off of support. Then you may want to nibble. Don't go all in, nibble. Let's move into currencies for a moment. The U.S. dollar, Japanese yen trade is one that we need to watch because it influences the market. That is the yen carry trade. And we have U.S. greenback down at the open. This bodes well for emerging markets. Let's check in with... Yes, please like the live stream. It gets the algorithm, as TF Hatter points out. It helps spread the word, spread the gospel. Like, subscribe, you know the deal. Let's go to Japanese yen. Japanese yen moving up. It had a pretty good week last week. So this is technically bullish for equities. Doesn't help my short, but we don't speak our book here. We speak the truth. I'll show you in a moment a guy who speaks his book constantly, and I'm calling him out tonight. Euro moving up higher. It also had a very good week last week. So euro yen strong, week at the open, and that's good for the U.S. Dow Jones Industrial Average. Why? Glad you asked. It's because our exports are cheaper overseas, therefore we become more competitive with our pricing. So that currency conversion helps the U.S. mega caps. Let's check in with, let's go to gold. Gold is down. Let's see how it opened. It was up. Let's set up our alerts. Now let's try that again. I'm pretty sure I put in above, but every once in a while we make a mistake. God darn it. Single, above. Good. Okay, so my tune on gold and the mining stocks has somewhat changed from cautious to now being more bullish on the space, especially with the US dollar pulling back. There's supposedly supposed to be 4% GDP growth, yet they're going to cut rates. Okay, that's inflationary. So that's why you're seeing gold, silver, all rally up higher. Palladium moved up higher last week. Here's silver, new all-time record highs this evening. Any pullback here is an opportunity on silver because what you have are, almost made that mistake. What you have are clear blue skies right now, clear blue skies. Let's check in with the other metals. PA, palladium looking really good here. It has broken out above resistance in red, and we have follow through. I'm going to pull back here and go to a 4-hour chart. Yeah, this is pretty. We take out that alert at 1514.50 on palladium. We're coming up here to test 1542.20 the ounce on palladium. So the metals are firming up here very, very nicely. I know I hit above, and it's not above. But it hit my other alert. All right, so we took out prior highs here. This is going up. Palladium, very, very bullish. Really good price action here at the open. Platinum, PT? No, PT, PL. PL is platinum. Let's go to the 4-hour chart. I'm not a day trader. I need to get a vibe on a higher level view of how the price is performing. And this is doing exactly what you wanted to do. You know, we pulled back, didn't undercut double bottom. Then we got this breakout here. That's your pivot point. We broke out, retest, rally, stair step 1, stair step 2. Now, I wouldn't buy here. I'd wait for that next stair step and then get ready for the continuation move up higher on platinum. Very bullish here. I want to take a look at the weekly chart. Very bullish. Very, very bullish on the metals in general. And really, what is this telling you, right? The markets are a beautiful thing. And you need to be able to take a look at it and say, okay, what story is gold, platinum, silver hitting all-time highs? What are they telling us? What's going on out there? And what it's telling us is that we have a Federal Reserve that has gone off the rails. We have monetary policy, which is ridiculous, the spending. Our deficit is at Gordon Gekko would say, at nightmare proportions. And there are no adults in the room. So this is the metals market saying, yeah, we need hard assets because this is probably not going to end all that well. It can't. Now, if we make that, what's the very definition of insanity? Doing the same thing over and over again and expecting a different outcome. That's what the metals market is telling you. And I think what you're going to see now is energy begin to send that message home as well. Let's check in with protein, live cattle. Nice bullish reversal bar on, I would not buy it, but nice reversal bar last week on live cattle. 15-minute chart. This is probably going to go up higher. I wouldn't buy it. I think the rally here is done. It's probably going to be a bull trap. Let's take a look at, I want to go to the weekly chart for ag. So wheat here, all down weeks are not made equal, right? All down weeks are not made equal. What does that mean? Well, we closed down last week, meaning off the highs. We're up on the week, but we closed down off the highs. So you've seen that red candlestick. What story is this telling us? It's telling us that we broke out above this resistance level and we pulled back, not quite the retest that I would like to see, but if we get a follow through above this price target here, and then God forbid for shorts, a rally up and through this price point here, you're going to see a massive short squeeze on March wheat. You're going to see it against the entire curve, but March wheat is the front month contract, which is what we're looking at, and that's going to be that's going to have a rip your face off rally. So while we closed off the highs of the week last week, we did close up, we did break out. I'm bullish here on wheat. Corn, a beautiful week last week. I mean, here, all you need to do is take a look at this. Here, this is the weekly chart. What happened here? Well, we were in a downtrend, right? No bueno zone. Shorts were in control. Then all of a sudden, we bottomed out, rally, pull back, higher, low. Oh, that's nice. So that's a long-term consolidation. And now we go from being bearish to neutral to now being bullish on corn, because not only did we break out last week, we closed at the highs of the week. I think that we're bare minimum, we're coming up to 461.1. And I'll tell you, you start taking out these pivot points here, 492.51, then up here at 504.90, 501, corn goes up a lot higher. But again, if these commodities break out and you have equities that are trading at a 40 handle on the Schiller PE multiple, you have ag prices breaking out, you have gold, silver, platinum, palladium breaking out, you now have oil breaking out, you have natural gas weekly time frame setting up for a nice consolidation, getting ready to move up higher. That's inflation. That's inflation. Now, if wages rise to meet that inflation, well, then all is right with the world. That's equilibrium. But do we have that? Not really, not yet. All right. We did not do soybeans, ZS. Soybeans looking very, so the entire ag space looks bullish, and I'll stack rank them by bullishness. Top of the list, corn, soybeans, then wheat, bullish. I think live cattle, you're going to get a counter trend rally. I think that rally fails. I would look to fade that rally. Uh, so if you're quick on the trigger, enjoy the ride up on live cattle. I think it's going to be short-lived because there's a supply-demand issue that's being resolved there. So let's check back in with volatility. Not much changed here. NASDAQ up, not at session highs, but up. Yields still down. Let's check in with crypto really quick. Crypto, XRP had a good week last week at the open here. We were higher. We faded a little bit. So it looks as though crypto, at least XRP, is finding its footing. Bitcoin, tomorrow's our dollar cost. Every Monday we dollar cost average into Bitcoin, XRP, a little nibbles. So up 0.23%. Rough day on Friday. You have a lot of resistance right here at 92,428. Momentum is beginning to rise on a weekly time frame, which is bullish, but price and volume matter most. So keep an eye on it. And if you get that, that means momentum will, of course, follow through. All right. I think I nailed everything that I wanted to nail. Let's just bring up VIX on a weekly. Okay. Very tight consolidation here. As a matter of fact, I will point this out. VIX has a major Bollinger Band squeeze setting up here. And what is that? In orange, you have your Bollinger Bands. In this cream white color, whatever you want to call it, those are your Keltner channels. Usually the Bollinger Bands trade outside of the Keltner channels. When they're trading inside the Keltner channels, the interpretation of what you're looking at here is that there is a tremendous amount of pent-up energy, a conflict between bulls and bears. And one is going to be proven right. And in this instance, I'm going to side with the ES just moved to new session higher highs. That's the NASDAQ, the S&P 500. You have a conflict between bulls and bears. You have a lot of energy pent up. And I think in this instance, the probable outcome will be a VIX breakout. And it could be this week. It could be next month. It doesn't have to be immediately. But it's setting up here for an explosive move. And why do I think it's going to be the upside? The reason is because there's not that much downside. So there's plenty of upside here. There's not much downside. And when you take a look at the longer term view of the VIX, you know, one thing is clear. We are in a major consolidation, and we have stopped going down. Sorry about all these lines, but I need them for future reference. So here is the lower band of support. Here is the upper band of resistance. And we have silver, new higher highs, now at 57.73. So if we get volatility breaking through a 24 handle and closing there, tighten those stops up. You don't want to be on margin. So that's the futures. That's the week that we're beginning with. Looks kind of exciting. Commodities are front and center. Let's check back in with oil due to the Venezuela issue. This is now a 30-minute chart. and our alert is set. I think we're going to blow through this. I think we're going up higher on oil. Unfortunately, that is inflationary. Let's get to okay. Economic data coming out this week. We have on Monday, ISM manufacturing. We get Jay Powell out tomorrow night. Tuesday, not much happening. Wednesday, ADP. So if it's ADP on Wednesday, that means it is jobs week. On Friday, we're going to get the Pimp Mac Daddy of all economic data, which is non-farm payrolls. Is it here? Wait, where is it? Maybe it's delayed due to the government shutdown. PCE. This is the Federal Reserve's favorite inflation gauge. There's no jobs data coming out on Friday. That's a first. I haven't seen that. Usually when you get ADP on Wednesday, you get jobs on Friday. We do get on Thursday initial jobless claims that are coming out. So the lack of economic data with the Friday jobs report tells me that the markets are going to put more emphasis on this ADP report more so than usual. So watch out for this report. Many times they shrug off ADP, but now that you don't have the government numbers on Friday, that's a problem. So just be aware of it. FedWatch tool, probability of a rate cut, 87.4. So the Atlanta Federal Reserve has come out and they've told us, said, listen, we have great GDP growth, almost 4% Q3. Beautiful. Why do you need to cut rates? If we have such great GDP growth, why do you need to cut rates? So they're going to do it, and they're going to stoke inflation. And you're already seeing it in the commodities front. So there it is. So I wanted to play this for you. Hopefully let me validate that I have shared. I'm going to stop sharing. I will now reshare to ensure I was not doing it. Thank God I checked. Okay. For you folks that do not know him, this is Bill Ackman. My experience with Bill Ackman, especially going back to COVID, is that if his lips are moving, it's probably a manipulation of some sort. So he's very successful. Can't take that away from him. But if his lips are moving, be very, very careful. Look at the opposite. Go.
Short selling is just inherently treacherous. If you buy a stock, it's called going long, right? You're buying something. Your worst case scenario is you lose your whole investment. You buy a stock for 100, it goes to zero, you lose $100, right, per share. You buy one share, you lose 100. You short a stock at 100, what it means is there's no limit, right, to how high a stock price can go. Companies go to $3 trillion in value, right? Tesla, a lot of people shorted Tesla, saying, oh, it's overvalued. He's never going to be able to make a successful electric car. Well, I'm sure there are people who went bankrupt shorting Tesla. That's why we didn't short stocks. Short selling
Okay. I want to bring you to this comment here. That's why we didn't short stocks. So this is what you call a recreation, a remake, a redo of one's image, because he's going to have you believe, oh, I don't short stocks. Well, I remember, I have the honor of having years of doing this, and I remember him shorting a bunch of names, not the least of which was Herbalife. And he was so arrogant is that he literally welcomed Carl Icahn to come in and squeeze his short position. Let's listen to good old Carl going back. I don't know. This is probably back to 2013. Go.
Ackman is a liar, okay? To begin with, I've lived my life from 1960s and 70s by handshakes. I almost lost my firm a few times by handshakes. Ackman does pump and dump. He's got one of the worst reputations on Wall Street. And I'm going to tell you, this Herbalife is a classic example of what he does. Let's look at Herbalife. Ackman was doing badly in 2012. He was down 2-3%. He probably woke up in the morning and said, let's see what company we can destroy and put out a bear raid on it. It's happened from the late 80s till now. And go do a bear raid, kill the stock, and now we can show our investors we made more money. And by the way, if we can mark these things and make more money, he says that he's not taking the profit, but that gives him a better rate of return for himself. Ackman has done that. If you read the articles about him, he's done it all his life. And I will swear to you.
All right, so we just heard that Bill Ackman just said earlier that he didn't, past tense, didn't short stop.
That was a really good decision
that
to price him.
Was absolutely bogus. He did short stocks, and he's a very arrogant dude. That, however, is if you see him on Twitter, if he's telling you one thing, he's probably doing the other. And it's not just him. Frankly, he's doing his job. So I don't begrudge him for it. The purpose of me bringing it up is that you see a lot of this, a tremendous amount of this, and they manipulate the financial news media to get you thinking one thing while they're doing another. Be careful. This is just a perfect illustration. I wanted to share it. I'm not saying he's doing anything wrong. I'm just saying he's doing his job, and he's trying to take parking space up in your head, give you a vision of himself, which is not the reality. Okay?
Something else that is not banking.
By the way, I hate TikTok. By the way, Herbalife stock, which you would have held on to that position, here's the monthly chart. It would have ultimately been proved accurate. But here's that short squeeze he lived through. Crazy dude. Okay. Oh, and by the way, I forgot to mention this TrendSpider. Automated technical analysis. I believe in it so much, I give it away free with an R. I'm changing the levels. It's going to be interesting soon. Our products, more to come on this, coming out soon. I'm keeping my cards close to my chest for a reason. But what they're doing is they have Black Friday sale. Use my discount code, link below, CON35, if you want their standard version. I can get you a better discount. However, if you want the advanced, enhanced, or premium, use their discount code. Or they're probably just going to give it to you at the checkout. Use the link below, head on over, get 65% off, up to 65% off on these packages here. So that is our promotion of TrendSpider, a great partner, and we're going to be an even bigger partner very, very soon. So more to come on that front. Very good people. I wanted to talk a little bit about the Fed balance sheet. I know a lot of people's your eyes are glossing over. Why does he want to talk about this? What does it mean to the stock market? It has a lot to do with the stock market because on December the 1st, or effective December the 1st, the Federal Reserve, as per Jay Powell at his last FOMC press conference, stated no more rolling off of debt off of the balance sheet. What does that mean? It means that the pressure on the bond market gets alleviated. They don't have to absorb these new treasuries that are coming onto the market and trying to sell them off, which forces yields up higher because supply, you got to pay higher yields. So there's going to be less supply, and that's bullish for longer term yields. Maybe there's a caveat there. So the fact that you're going to have a major seller of bonds, mortgage-backed securities, et cetera, that's going to help. It should help anyway. Long-term interest rates. That is bullish for equities, in particular, your small to mid-cap stocks. And you saw small caps rip last week. So if you're bullish on the market and you want to put money in a place or in an area that is poised to do well due to the rate cuts, you want to look at small caps, you want to look at mid caps. The valuation of the mega cap names is just simply ridiculous. We closed out the week last week with a Schiller PE ratio of 40.42. The Buffett indicator, we have an evaluation just at nightmare proportions. And you have guys on Twitter that are, did I share this out? We can talk about this. It's not really what I wanted to talk about. We have guys on Twitter that are giving you every chart out there trying to illustrate why the market is a value right now, why you got to buy stock. Hell, maybe it's going to go to new all-time highs for all I know, right? But one thing I do know is this, is that when it comes to not the Dow Jones Industrial Average, but the triple Qs, of which I have a short position, they stopped going up in October. There was no new monthly higher high in the month of November. So when I look at a stock or an index that I'm looking to short, first thing I look for is it stops moving up higher. That's a stalling process, a topping process. Rarely do they just drop like a rock. Usually they pause, put in a rounding top, and then the bears take control. Now, if they gap us up tomorrow to new monthly higher highs, guess where we're going? We're going up here, and that'll force me to cover a portion of my short, if not a large portion of it. Because if we make new monthly higher highs, that's a tell, especially going into December, which is pretty seasonally favorable. Let's go to the seasonality chart. Well, for the Qs, not that much. Going back 27 years for the Qs, it's a coin flip. However, for the S&P 500, it's a bit better, where you have it up 66% of the time. Let's check in with the small caps. And they are up 64% of the times in the month of December. So one thing I will point out here is that small caps, their best month out of the year was November. The however is they didn't put in a new monthly higher high. But I do believe they're going to move up higher. Why? It's because you had this beautiful bullish key reversal. So you take your crayon out and you do this. In all probability, we get a new monthly higher high. We're coming up to 260.7 on IWM, the Russell 2000 small caps. So with that, I think we could do some chart requests. Let's see who we have here. I need to do Palantir and NVIDIA. All right. Bonnie Bean. TSX. And WEF. Okay. LABU for Franklin. LABU, very good week last week. Oh, look at Miser with the energy play. Neighbors. That should be a good one. What did I do? What did I do? Make a mistake here? All right. Okay. Thanks, Franklin. All right, so we could skip those. Okay. All right, let's get to it. I want to go over Palantir and NVIDIA. All right, Palantir, I think it's done. This is a monthly chart, Palantir. You don't use seasonality here. It's only got 5 years worth of data. I think this egg is cooked, and I would be ringing the bell here. The weekly chart, inside bar last week. So my guess is that we are going to get new weekly higher highs. You have overhead supply here, and that it's probably going to fail. I don't think we're going to put in new all-time highs, at least not in the next month, probably not the next 2 months. I think that we're probably going to start putting in lower highs on Palantir, because one of the tells here is that you had an all-time high here back in August, pulled back, healthy, good stuff, rally, consolidation. Then we got a breakout. But this breakout was what you call a bull trap. It was a rug pull. So that really destroyed a lot of confidence, so much so that the selling became so strong that we took out the lows of this consolidation range here. Very bearish. So I think you have institutions selling here. So while you may have a swing trade to the upside, I think that it's going to be short-lived and it's probably going to get faded. This is a very expensive stock. I would be very careful with Palantir. Daily chart looks pretty good. Again, I think it's probably going to move up higher. Do we take out all-time highs this month, next month? I don't think so. I think we're probably going to either A, consolidate, or B, pull back even further than what we've seen in November. NVIDIA. Let's go to the monthly chart. Yeah, this is not a name that I would want to buy. Great earnings, right? Great earnings, but they didn't tell the full story. They have an inventory problem. So this is an outside reversal bar, a bearish engulfing. Call it what you will. It's not good. In all probability, we're going to get lower lows on the NVIDIA weekly view. So we had 4 weeks of consolidation. What I think is going to happen here is that if the markets open up green, NVIDIA is probably going to rally. Then we face a battle right here, right where you have, this is the automated trend lines, right here at resistance. So I want to create an alert. I want to know if we break through, touch. Now, I'm not setting this alert up for a buy. I would be looking to fade it and look for more downside move here. The video. And we'll keep this alert active for, I don't know, a month. There we go. So we set it, we forget it. Let the alerts work for us. We don't stare at the chart. All right, so that's NVIDIA, Palantir. We have TSX. I'm not familiar with that company. That's not the symbol. TSX, unless I wrote it down wrong. Is it crypto? Maybe I wrote it down wrong. TSX. Western Forest Products. No, so it's not crypto. Let's try it again. Western Forest. Oh, this is now an OTC stock. So right off the bat, I'm going to say be very, very careful. So the symbol for a trend rider is WFSTF. The weekly chart looks very good. Let's go to the monthly chart. Oh, this is a very nice looking chart. Again, here's the value. I've never looked at this chart in my life. Here's the value of the automated trend lines. Boom. So what story did these automated trend lines just tell me? A, they've been acting as really rock solid support. Even after this test in here, December, this is a year ago now. Over a year that we've been consolidating here. So the phrase that we use is the greater the consolidation, the greater the validation of any breakout. So if you have a over a year's worth of consolidation, any breakout here is probably going to hold because the shorts are out. They booked their profits. They're done. You're still going to have some that are asleep at the switch. They think that things are going to go to zero. They buy their own BS. It happens all the time. And I think that it's getting ready for a rip. I would check the short interest here, not the short percentage, the days to cover. Ugh, I screwed that up. Let's just do this. All right. We don't want any sensitivity. All we care about is execution. We want to close above 835 per share. Is that really? I'll confirm it in a second. WSFTF weekly breakout. Excuse me. And we'll keep that active. And that price top point is $9.79. I would write that down, set your alerts up at that price point. Just because we hit it doesn't mean you buy it. You want to make sure on at least a weekly chart, maybe a daily chart, if you get a breakout and then a couple of days of consolidation on a daily time frame, so that you know that it's not a rug pull, it's a breakout, retest, then you want to nibble, add more on the continuation, move up higher. If you want to nibble here, I got no problem. I don't think it's going down any further. Weekly view. Good breakout last week. So were I to nibble here, what I would do is wait for the check back. $7.85 is the point. I would put your limit order in. You may be saying it's never going to hit that point. I'm just going to buy it now. Don't. Trust. Put your order in at that level. Consult your financial advisor first, of course. But I'm telling you what I would do is $7.85. Nibble. Scratch the itch. And then once you start breaking through resistance levels, which I mentioned, then you build your position, you pyramid up. You want to buy on strength. Daily view. And this is why I started off this conversation about this stock, about being in essence, a penny stock. This is very thinly traded, okay? No market orders ever on this stock, unless, of course, you have your rip your face off moment on this thing. The stock is parabolic, and you just want to get out. Market order. You got plenty of liquidity. This is an illiquid stock, so this is why it makes it so important that you're waiting on a weekly time frame, even on a monthly time frame for the signal that you have a successful breakout. They can move this stock around very easily on a couple of hundred shares. So be careful. No market orders. It did gap up and close above resistance levels, but what was the volume here? Volume was what? Less than 10,000 shares. That's scary. That's illiquid. Very, very illiquid. Yes, it is the wild, wild west. No doubt about it. You got it, Tim. No worries. You want an NB or NBIS? Maybe it was somebody else that asked for NB. That was Miser. Okay, I got you. NBIS. All right, good stuff. Let's continue on. WEF. I keep thinking World Economic Forum. WEF. Why is this not coming up? What's WEF? That's coming up as a pairs trade on crypto. I don't know what that symbol is. So if you want to pop it in, and I will try to search it out by name as we did with TSX. Moving on, LABU for Franklin. All right, so healthcare is in fuego right now. Lots of money moving into this space. LABU, I sold this one too quick. We made money, but this looks like it's going to have a rip your face out rally. Great. What is this now? 1, 2, 3, 4, 5, 6 months in a row up. We closed at the highs of the month. Volume, I will say this, volume declined, has been declining. That's a bit of a watch out. Let's check out the seasonality. 10 years worth of data. We have the month of December is not wonderful. No shock. November's the best month, as it is for most stocks, ETFs. Going into the new week, coin flip. The following week is very, very weak. That may be the time you want to pounce if you want to look to add more or initiate a position on any pullback. Let's go to the weekly view. Yeah, I can't chase this. I would ride it. Trailing stop loss order. I think you're going to get a pullback here at some point in time. Price target number one on a pullback, 158. Thereafter, 149. Those are the 2 price points. I would look to add more LABU. Let's go to the daily view. All right. So in all probability, before we get that pullback, where we're going is here. 172.10. Again, the power of the automated trend lines. Big time saver. So take advantage. Link below. Trend Spider. Get your discount. Black Friday, all that good stuff. Cyber Monday. So LABU bullish with a caveat. It's extended. I would not initiate a new trade here. You may want to look to sell some covered calls up here or lighten up on the position, allow for the reaction to the downside, reload on the position. But longer term, I think that you're fine if you just want to sit. The money's made in sitting, right? So if you just wanted to sit with it, good, fine. Maybe sell some covered calls. What do we got else? NB. Oh, that's not Neighbors. I thought it was Neighbors. Oh, NBR is Neighbors. NBR. Neo Corp Development. Never heard of it. All right, so let's go monthly chart. We go monthly chart to identify where a stock has been, to appreciate where it might be going. And I think you've had the rally here. So let's tear this down. So you had a breakout here. Then you went parabolic. These are 3 standard deviation Bollinger Bands. Let's do this. Let's throw up a 4 standard deviation. You had an excess of probably a 5 standard deviation move on this stock, which is just crazy. It's unsustainable. And of course, you had the dump. And they sold it, and they sold it hard. This stock tomorrow, being the first week of December, needs to salvage the monthly chart because we broke back down below critical support. This should have held were it a healthy stock. It didn't. It failed. So you might get a pop-up tomorrow, but if we stall at this resistance level now at around $6.50, and we just hover there, it's probably going to fail. Now, if we gap up above $6.50 and close there on the week, then you'll see a consolidation. There is zero reason on Monday to go chasing the stock. It's not going, unless they have a big news event, and maybe it's a biotech. I have no idea about what the company does. Obviously, it's highly volatile. Absent some news event, and you're not going to know about it anyway. So I would not chase the stock quite yet. I would see whether or not it closes above $6.50 per share. And excuse me, does it gap up above 650? Does it close there on a weekly time frame? If it does not, then avoid it. The market sends you signals. These topping tails are clues. It's telling you there's a tremendous amount of overhead supply above, and it wasn't strong enough to hold monthly support. That's a major tell, weekly view. Now, the week last week was not horrific. So this bodes well for the potential gap up scenario above 650. So this is what you're looking for. Where's 650? A little bit below that, but you get the picture. You have a little bit of resistance here. We need to gap up above there tomorrow and close there. If we don't, I would avoid. Let's check out seasonality. If there's no 14 years worth of data, monthly chart, you're not in a seasonally favorable period of time at current. The however is that gets a little bit better in December, but it's a coin flip. 50-50 odds. That's horrible odds for trading. So you want much more of an edge on a seasonality basis than simply 57%. If you showed me 65, 70%, then I would be more prone to use seasonality. I would not use it here at all. Now, let's do a deep dive into the weekly chart. And seasonally, it has a very good, okay, I shouldn't say very good, an okay week. Again, a coin flip. Obviously, you get much better weeks going back 14 years. So I don't see a seasonality edge here at all. And there's a lot of overhead supply. Daily view. Again, you have overhead supply. The stock needs to gap up, close above $6.50. Franklin, you are very, very welcome. Just a reminder, tax loss harvesting soon. Yeah, very true. Okay, last one up, NBIS, Nubius Group. Again, another one I don't know of. This is the weekly chart, okay, monthly chart. Let's change the Bollinger Bands from 4 to 3. Did that take? I don't think it took. Let's try that again. That was my bad. Okay. Big volume sell-off last month. We closed at support right at 95.30 weekly view. So we found some footing here. They gapped it up. I would be looking for a check back or retest of between 78, 76 and around $83 a share, in that range. I don't see any reason to go jumping in on this stock. I'll go to the daily chart in a moment. No rush per se. I mean, it's had a nasty sell-off, and it's worthy. Remember, traders are OCD, obsessive compulsive disorder. I know because I have it, okay? We like when we get a breakout for resistance, which is this line or was this line in white, to become support, right? We want to touch it again. We broke through it. We want to go back, touch it, make sure that we have more buyers back there That gives us reason to stay long and perhaps even add more if we get follow through. So I would expect that to happen here on NBIS. Let's go to the daily chart. W formation, not a bad daily chart, but no rush here. There's no screaming buy. Down volume on Friday was very, very light. And I believe the weekly up volume was okay. Yeah, it was good. So no rush here. The trend is up. It's just a matter of how you structure the trade. And that is to wait for the pullback, stay small, nibble, test the market, wait, and then as you see higher lows and higher highs, add more, add more, add more. Our last one up for improved, and that is RIG, Transocean. I haven't looked at this one in a long time. So it's looking good on the monthly chart. And I like the energy stocks and how they closed last week. Would I initiate here? Probably not. Because they closed it right at resistance. Right here. If they gap it up and they close it above, let's call it, here, let's do this. Let's use the highs of last week. Let's call it $4.44, $4.45. If they close it above that mark, I would be prone to at least scratch the itch, open up a position, test the market. Is this, we've had a lot of head fake breakouts on the energy stocks. So I think that we're done here with going down. Here's your capitulation sell-off, and then the buyers moved in. Now it's a matter of strategy. When do you want to add here? And to add into resistance is not what we do. We want to make sure that we have validation, that we have enough bulls to close above resistance, consolidation, which is what happened here. They broke it out, consolidated, follow through. Perfect stair-step action. That's what you're looking for. All right, so RIG looks interesting. Not a screaming buy by any stretch of the imagination. We're at resistance. Be aware of where you're at. And that's it, folks. Everybody have a profitable trading week. Don't forget about TrendSpider. There's 65%, up to 65% off on all their packages. Link below. Take advantage of it. Have a profitable trading week. I'll talk to you soon. Be well.